Hey everyone, welcome back to another episode of the 6-5 podcast. It is 7 a.m. and if you're looking at your watch and you're wondering why we are on early, well, it's Friday, it's October 20th, and it's the US Grand Prix. And Patrick's flashing the splashing because he's got the paddock passes. And well, Pat's just a luckier person than I am. And what can I say? But someday, if I work really hard and I continue to put in the effort and do great 6-5 podcasts, Pat will get to go to another US Grand Prix. I've waited so long to do
No,
that.
that's so good. No, Dan, work hard, work your butt off, and you can maybe buy me a Lambo. So
Someday,
we're
maybe, can you see it twinning? Lambos left and right, side by side, Lambos, Porsches. I don't know. We'll have to pick something awesome. And someday, maybe if
That'd
we
be
put in a
amazing.
shift, we could get there. But listen, we're really committed to this show. And I'm telling you, everybody, over the next few weeks, it's going to be a bit of a whirlwind, but we will do everything in our power to each and every Friday, or maybe it'll be a Thursday, maybe it'll be a Monday, but to bring you our weekly show because there's so much going on in tech. We are steering down the barrel of another massive wave of earnings. We only have a little bit of that today, but we also have had a lot of really good technology news that we need to break down and analyze here on the 6-5. And we've got some good stories this week. So we're going to be talking about a little bit of Qualcomm, Google, and a RISC-V agreement. We're going to talk about the Lenovo Analyst event that we spent 2.5 days at. We're going to talk about Oracle's SuiteWorld. The US is after NVIDIA and certain chips again, and seeing that they don't go to China. Pat and I had the chance to tour the Annapurna Labs at AWS here in Austin, and we're going to talk a little bit about that. Pretty cool. And then we're going to end talking a little bit of earnings. It's the start. Yep, I've said it. We sometimes don't love it, but we got to talk about it because it's the ground truth of the technology industry. Pat, good morning. I'm going to do a quick disclaimer. We're going to get the show on the road because somebody's got to work at the Grand Prix today. Anyway, all right. So if you haven't listened to this show before, I'm going to ask you why, and I'm going to suggest you hit that subscribe button because it's awesome. But in all seriousness, this show is all about breaking down and analyzing the biggest news and events of the week in the tech industry. We'll do as little news as possible because we're going to tell you why or so what, not what and how, like so many other podcasts do. And just a reminder, the show is for information and entertainment purposes only. So while we do talk about publicly traded companies, please do not take anything we say as investment advice. Pat, Google and Qualcomm are going all in on RISC-V. Is it the end of ARM?
Wow, you kind of jumped right in there, didn't you?
Sorry, I was feeling it this morning.
No, never be sorry, dude. Just be you. No, here's the deal. So I do need to just explain kind of what's going on. So Qualcomm made an announcement with a supporting quote from Google, essentially saying they're going to build a wearable ecosystem based on RISC-V. There were no deviceability dates or anything other than the announcement. I don't think that means it's vaporware. In fact, it's very much real. Uh, Qualcomm has been part of the RISC-V consortium for a while. And back in September, they cranked out a pretty big press release on their continued commitment. And quite frankly, I again, almost everybody has RISC-V in some way, shape, or form. AMD has controllers, and NVIDIA does on their graphics cards. I believe that Qualcomm has some on their modems or their RF. I'm not exactly sure which one, but essentially, think if you don't know what RISC-V is, each piece of software speaks different language. Some speak x86, some speak ARM, and this new one called RISC-V. Right in the past, there were architectures called MIPS. You have a different instruction set architecture for the Power Platform at IBM, as well as their Z mainframe as well. So a lot of different instruction sets, but I think the big question I had is, and the question I would get is, hey, what does this mean, right? The Qualcomm Wear ecosystem isn't huge, right? Apple dominates in wearables, and there are some low-end vendors who supply a lot of the Chinese. So, what does it mean, and why should we care? Well, there is a distinct potential that if Google and Qualcomm successfully pull this off in the market, that this could lead to a RISC-V smartphone. Okay, and we're looking, at a 1.4 billion unit market that today is really 100% dominated by ARM. And it is a heavy turn, but let's look at some previous heavy turns, right? Uh, Heck, Intel used to do smartphones, and they had an award-winning smartphones that they powered. And what they did is they did instruction set translation in the cloud when you would actually download the application. And you're like, well, how does it work like that? And why doesn't it work like that in Apple? Well, the oldest modern smartphone app is probably 5 to 6 years old, right? That runs on Android or iOS, and they use IDEs, and they use very kind of high-level abstracted tools, maybe with a section of games. So even Intel was running Android applications that were initially written for ARM. They were auto-translated in the Android App Store. So another example is Apple, right? And what they did going from Intel to ARM. And one of the keys there was backward compatibility and the ability for that chip to run x86 instructions until it wasn't pretty, but when you were bringing that much performance, probably a 40% performance per watt boost over x86, you can get away with maybe 10% overhead of doing that. And the final example I'll use is ARM in the data center, right? Where you'll have applications that could be 20 years old. It took ARM a little over 10 years to move that, right? You had to do the OS, you had to do middleware, you had to do um, application layer, right? But in about 10 years now we have AWS doing a full up Graviton for their entire data center. We have Ampere One running the entire NetSuite layer for Oracle. So yeah, this is possible. Now, how difficult is this going to be? It doing smartphones. It would be more difficult than a wearable, less difficult for a PC and the data center. Probably take about 5 years. That's just an educated guess to get this right. And the long pull is always games, okay, where they are doing some, deep instruction level work.
So, first of all, am I in? Second of
You're
all,
in, baby.
I'm in. Second of all, you have to wonder where it's at in terms of the things that aren't being announced. And so we know that it's been several months now since ARM brought its lawsuit to Qualcomm, and we know that with that, Qualcomm not only is, well, arguably the world's largest law firm, kind of joking, but kind of serious, successfully defended an onslaught of attacks from basically every FTC in the world and Apple all at one time. And, with that, I think Qualcomm certainly is going to be thinking very significantly about hedging its strategy long term. And of course, Pat, I think you made some really good arguments about where that will start and directionally where that might go. It's going to start with simpler devices where RISC architecture is less risk potentially to be able to develop around. And over time, you will likely see it expand itself into other areas. As you suggested, Pat, I think, like you said, I think there's lots of companies exploring risk right now and the possibilities. And as ARM continues to grow, change the way it licenses, change the way it charges to make sure that it's meeting the demands of its shareholders. That could open up doors for open source. That could open up doors for RISC-V. Remember, ARM is a RISC architecture, so it started there, and of course, it found its way to disrupt Intel and others, taking significant market, not the majority, but significant. And over time, you'll expect new architectures to find their way into the market like this. So, where does it head from here, Pat? I think, there's probably work being done in those more advanced devices that you mentioned around RISC, but I do think it's early days. I think your estimate of 5 years is probably pretty close into the ballpark of where it might be, but I do think it's coming. I'd say on the record, I think these companies are going to hedge. They're not going to let themselves get into a situation where they can be controlled by a licensing agreement if they don't have to be. And we've seen it happen to every company that has substantial licensing, that over time they want to have more control of vertical integration. They want to have more control over margin and pricing. And if RISC offers that opportunity, RISC-V offers that opportunity, I could see it going more in that direction. So you hit the news itself. I'm just kind of philosophizing on what's going to happen with RISC-V, but I think you made some really good assessments there, and those additional comments are mine. So, all right, we've got to keep moving here. Let's talk about the Lenovo Analyst event. Pat, you and I spent the better part of 2.5 days in beautiful green Raleigh, Durham, RTP at Lenovo's headquarters, and we were joined by really their entire global executive team in from overseas. We had the honor of hearing from their CEO, who goes by YY, literally the 2 letters YY. That's how he presents, and that's kind of how he's. That's how everyone calls him when we talk to him. And he was really generous, Pat, with his time. Not only did he spend some hours with a small group of analysts, but he also took us for a pretty remarkable dinner in Raleigh, entire menu that was created just for this particular event. And Pat, I don't know about you, but I'm still full.
No, I am. I mean, I made the mistake of thinking we were done. We were halfway through, and I had eaten, so much Peking duck that I couldn't even eat any of that lobster.
Oh, but it was so good. It was so good. Yeah, I did the exact same thing. The 5th and 8th courses, the 5th, 6th, 7th, and 8th courses, I was like, oh my gosh, I shouldn't have eaten so much of the first 4. But a really great dinner. But that's a small fraction of what we experienced during these few days. Look, Lenovo is a very diverse company that covers a immense amount of ground. It's everything from the PCs and devices, which is what it's probably most well known for. And whether you talk to YY, President of International Markets, Matt Zielinski, Head of Infrastructure, Kirk Scoggin, they would all tell you that when you talk to people, they're going to say, "What do you know?" They're known for the device, the ThinkPads. That's what Lenovo is known for. But over the last few years, it has seen its revenue distribution change substantially, up above 40% of its revenue now coming from its infrastructure and services group. And while I really focused on that the company's core PC business is likely turning the corner. You heard him say the market had bottomed. And I think we've been waiting some time to start to hear the chip CEOs and the OEM CEOs say that with some level of confidence. And, he was able to say with some level of confidence that he thinks that we've arrived and that the market recovery is likely going to begin. Now, if you listen to Jerome Powell's Fed speak this week, you would hear he still thinks inflation is high. He's turning the screws on interest rates. And that worries me a little bit. The market took an absolute dive on the comments. And, with higher rates, you would see even lower growth for a lot of companies. But I'm going to stay positive here. The company's infrastructure business has had about 12 quarters in which it's run at a really great clip under Kirk Scoggin's leadership. Strength in storage, strength in server. He did an absolute victory lap of wins that the company had, both partnership wins, ecosystem wins, and customer wins. The company also really leaned into its kind of one Lenovo and its SSG, ISG, IDG strategy. Only about 25% of the company's customers buy more than just the PC, the IDG business. So while the revenues distribution is getting more even, they still have a huge customer swath that are not purchasing across their portfolio. Now, some are consumers, and the consumers will never buy infrastructure, but getting to a bigger set of their enterprise customers with their services and infrastructure is going to be a huge opportunity for the company to grow. And then finally, I'll say this, Pat. I feel like AI was brought up at least a couple of times. And by a couple, I mean a couple of thousand times. It feels like that was the focus. And look, there's this AI continuum right now, and every company's vying for what is our place in the AI world. And companies like Lenovo and HPC have a lot of provenance and pedigree. They have a lot of history selling GPUs for data center, and these are kind of the AI links. But from a service standpoint, building out like a vertically integrated solution for retail, where you build edge capabilities with AI for computer vision and machine learning using OEM partnerships, cameras, and integration and software. I thought that was probably one of the interesting ways that they're really getting to AI is through vertically integrating, going out to market with solutions and offering it across the portfolio, saying we can put infrastructure, services, and even devices together to offer a fully integrated AI solution. That's kind of the one Lenovo that I envision. Look, I could go on for hours because, Pat, we had like 25 hours of content, but these are kind of the big things that were on my mind. I'd like to see more and more tie together of the whole portfolio. And of course, I want to see that software data layer addressed a little bit more by Lenovo if they want to be serious about their AI strategy. But when it comes to picks, axes, and shovels, the company has a good story brewing.
Yeah, I need to watch what I say because it was a blend of public information, NDA information, and embargoed information. So I'm going to probably say less than more. In fact, even the slides that the company said we could share had Lenovo Confidential on it. So it was a bit confusing.
Hopefully, I don't think I said anything I couldn't, did I?
I don't know. We'll see, I guess, later this afternoon.
Shit.
Uh,
I
yeah,
noted it. I don't remember. I noted things that had the. Okay, go ahead.
I don't think you did. I'm not saying that for that. I'm just looking through my notes, wondering what I can say and what I can't. So, on a macro view, this is the first time I felt there was truly a one Lenovo. Okay. And I looked at different things for sources of truth. And even basic stuff like, do the slides look the same, right? And are they supportive of each other between IDG, ISG, and SSG? And the fact is that they were, and it was very well articulated. For the first time, I believe that there's one Lenovo, and I think that's powerful, right? And it's powerful, and there's a couple of ways you can get synergy, right? You can get synergy across the sales and marketing plane. You can get synergy across the product plane, and then you can get synergy across the solution plane. And I saw collaboration across all three, which was interesting. And a lot of those technologies came together with AI, right? How is AI being leveraged in services, the data center and the edge, and in devices? So that's really good and that's really powerful. And I don't think right now it comes at the individual products being weaker, because that's always the trade-off when you're going for a synergy play. Is, are you still best in breed in the markets that you're in? IDG is just an absolute runaway success. The leadership that Kirk has provided really is
In ISG, right? Just to be clear.
Sorry, ISG.
Okay.
Yeah. The data center and the data center edge group and the leadership there. I mean, just look at the numbers. I mean, 5x, 10x, getting back to profits. Now, it's not that profitable of a business, but I believe that the company is still in scale mode because it serves the hyperscalers, okay, to get a basis of volume that it could get good commodity prices. But man, I saw some logos that were not, Joe's gas station like you would have seen 5 years ago. These were Fortune 500 healthcare companies,
Joe's
right?
gas station.
These were major retailers out there like McDonald's. So they're really making it happen. And then when I look at the devices group, right, you actually have smartphones, consumer devices, and PCs, right? PCs are still rocking it. ThinkPad, Lenovo is still number one, and ThinkPad is still number one in commercial, which is pretty amazing. And they really laid out what they wanted to do and leverage AI that I thought was very clever. I can't go into, they're not just aping what Intel and Qualcomm are doing and AMD. They're coming up with some pretty novel stuff themselves, which you will see soon. And then, on the services side, and by the way, this is another reason why the devices numbers and the data center. Hey, you've got background noise that I keep hearing. Oh, where are you going, buddy? Come on. Oh, okay. Just mute yourself if you got that. But it's because the services profits and revenue are taken in SSG, right? And you don't see that in any other. You don't see that at Dell. You don't see that at HPE. It's an absolute separate division. So the hardware margins are the hardware margins, which is pretty crazy to me. But SSG is on the move too. When it first formed, I was super skeptical because, quite frankly, Lenovo 5 years ago was a hardware company, and going from a hardware company to a services company is really hard. The company made acquisitions. The company completely reorganized, and Ken Wong, I think, has done a fine job up to this point, making inroads into that market. They focus on three specific solutions that they're prioritizing right now: hybrid cloud, AI, and workforce solutions. And those are just low-hanging fruit where the company can leverage its primacy in hardware, and then get really good at the as a service offering. So I would say my view of the company took a tick up, if nothing else, on the one Lenovo. I agree with you on the data center AI side. It's something that's missing from their story, right? How are these companies going to connect ERP data, SCM data, CX data? What is Lenovo doing to help that? They're very focused on, I would say, in department type of solutions, which is, how can I do better with the CX data? How can I do better with the ERP data as it relates to generative AI? And to their credit, they've taken all the way to the vertical integrate the vertical side of it, partnering with, I would say, some of the smaller startups that are killing it in fintech, in retail, uh, different verticals like that, warehousing, uh, trans- transportation. So yeah, my view definitely went up. The company, I think, my last comment is the company needs to relook at the way it spends its marketing dollars. If 43% of the revenue is non-PC, are they actually spending 43% of their marketing dollar on SSG and on ISG? Doesn't seem like it, but I don't have the spreadsheet in front of me, but it doesn't feel like it.
All right. And I think that for both your and I's sake, we believe that if you get the momentum in one particular part of the business, like ISG, you want to lean into that and, give our friend Flynn some room to grow, we would say. So let's run into what was going on this week, Pat, on the other side of the country. We weren't able to make it, but you did a great interview, conversation, and analysis piece with NetSuite CEO Evan Goldberg. I read it on Forbes. Very impressive. Talk a little bit about what went on this week at NetSuite World, Pat.
Yeah, it was great to get with Evan the day before the show announced, and I would have liked to have been there, but my dance card was filled twice. So a little bit of background. If you don't know about NetSuite, they are the leading medium company provider for enterprise business suite, right? They do what SAP does. They do what Salesforce does, but they do it in a single. They do it in a single suite. Hey, Matt, buddy, how you doing? How are you?
Good.
Good. I love that
Great day at
headband.
school.
I'm gonna run at least a 37 laps at school today.
All right, go get him, buddy.
Crush it.
Thanks for saying bye to me. I'll see you from the. I'll wave from the race.
Oh, that's so cute. That was Dan's son.
Hey, everybody. Thanks for letting Matthew come join our pod for just a minute, everybody. I'll be there with AWS and Ferrari.
So good.
Thanks, buddy.
So yeah, NetSuite does a business suite, and in fact, more unicorns use NetSuite than any other package out there. But anyways, what did they announce at SuiteWorld? Imagine this. I mean, I'd have to think for hours to think of what they could possibly announce for SuiteWorld after the last 9 months. No, just kidding. Essentially, they announced generative AI across the entire suite. Okay, whether it's ERP, whether it's SCM, whether it's CX, it's across everything. And one of the examples that is just simple, and one of the benefits of having a suite like this is NetSuite Text Enhance. Okay, think of Text Enhance as maybe you've used the generative AI tools inside of Gmail, right? Where it says, hey, what do you want to write? And then you just type what you want to write, who you want to write it for, and it cranks it out. Well, this entire feature is across finance, accounting, HR, supply chain, sales, marketing, customer support functions. And one of the things that I think people sometimes miss is the value if this, for instance, this one feature, text enhancer, works the same across your entire platform. You don't have to have separate training for everybody. It's like one training for pretty much everybody, and you figure out how to learn that. And in smaller companies, you have a lot of people who are doing not cross training, but cross working, right? Your AP people do some AR, your AR people do some AP, your revenue generators do some marketing. So I think there's an incredible amount of value in this. Other examples they talked about is creating special narratives for collection letters. Dan, you and I can relate to that. I mean, we have these giant Fortune 100 tech companies who love to not pay us and leverage. Oh, you're still muted.
Yeah, they pay really slowly. The bank of Pat, as I like to call it, the bank of Daniel.
No, they're financing their $1 trillion companies on the backs of companies like ours, and with this you can write a personalized collection letter. Okay, and think about the power of that. If you have the authorization that you get access to accounts payable, or potentially a CX engagement, it will write this thing for you. Okay, and this is one of the simplest examples of how generative AI can bring value to a company. And Dan, I could go on and on and on. There were, another major announcement maybe on EPM that you can cover, but NetSuite, generative AI across the suite, one data plane, no changes to security, no data integration, nothing.
Yeah, you did cover a lot of ground, and Pat, sometimes the best indicator is understanding whether or not a solution can really work for business, and our business is using and adopting it. And NetSuite's growth rate speaks a lot for the market, and it also is probably the undisputed number one application for what I would kind of call your fast growth companies that are going public, PE owned, kind of that large interim growth stage to becoming a large Fortune type company where Fusion ends up being the platform. Oracle's sort of renowned for its ability to close its own books in 11 days. mean, think about that. Companies doing tens of billions of dollars. You know, I know companies that do $10,000 in sales a quarter and can't close their books in 11 days. It's pretty remarkable. But you hit it on the head, Pat. AI was the theme. And yes, there was an interesting enterprise performance management, which is really all about bringing together a number of the company's capabilities. A number of the business capabilities, budgeting, forecasting, planning, count and reconciliation, putting all those things together and creating better management, better visibility, better dashboards. But laying in AI both from a underpinnings of the way the software interacts with its users, and then out front, right? Being able to do text creation for what you mentioned in collections or sales notes through CRM. That kind of inclusion of AI is what the customers are looking for. Look, you and I will talk about, we'll talk about a chip lab tour. We're going to talk about AI chips going to China in a little bit here. But most enterprises, businesses, large and small, when you think about AI, what they're really looking for is how is AI embedded in my user experience? When I'm in the application and I want to understand my 10 best sales opportunities, can AI help me understand it? Can it help me write a good follow-up email? Yeah. Can it predict the likelihood that deal is going to close? Can it, tell me the ones that I should not bother with? Can it tell me which customer might pay faster and which one probably won't? I mean, these are the kinds of things that businesses are looking for. And I think NetSuite's doing a really good job across the stack. It's a competitive market through parts of the NetSuite portfolio. Like the CRM side's always been a little tougher. It's got a very strong foothold in the ERP side. Having said that, with the CX features it's building, it's becoming more and more compelling as we go. All right, I won't go on. Read Pat's article. It's really good. It's really good. And it covers a ton of ground there. So let's talk, Pat, about NVIDIA. You actually wrote an article going back, gosh, Pat, a few months now. And, we all like to do a victory lap. I like to talk about when I called out NVIDIA becoming the next $1 trillion company like 3+ years ago. And sometimes it's getting things right 3 or 4 years back. Sometimes it's getting things right 3 or 4 weeks back. But Pat, a couple of months ago, you basically said Joe Biden and the various chip controls he's putting into place simply aren't going to be enough to stop the routing of advanced accelerated computing chips from getting into China. And I think so far, Pat, it's proven to be correct. We knew this going in. We know that most of these kinds of import-export controls rarely work. And that's because unless the world wants to cooperate, and I mean the whole world wants to cooperate, there's always the 2 and 3 and 4 steps, right? It gets sent first to Italy, and then Italy sends it to Macau, and then Macau says, well, we don't have any rules, so we'll ship it to China. We don't care. And by the way, nothing with Italy. I'm just randomly using that as an example. But my point is that, we know that the next big frontier, the next war is going to be fought on the technology front. And while, yes, there are certainly ground wars being fought right now with weapons, we know that also if you've watched Israel's rocket, I don't know what they call it, Pat, but basically the shield that they used, this is heavily technology driven, the ability to build these defense systems. And it's, machine learning, it's training, it's intelligence, and the advanced semiconductors are going to be key to that particular, front. And of course, there's a technology leadership battle being fought on a global basis right now, right? The country with the strongest AI is going to have the strongest economy, is going to have the strongest growth and productivity. It's going to have, the world's admiration. And so we've been at a long time philosophical arms race around technology with China, and us sending our most advanced technology and intellectual property over there for them to build and iterate and innovate upon is a risk factor for us too. So I'm not talking a lot about the specifics here, Pat, but what one thing I will mention is basically companies, Intel, NVIDIA, AMD, we're all looking at building these kind of tuned down AI chips, the most notable, the 800 series from NVIDIA, and they were basically designed to get around the chip controls. The chip controls had certain specs. They said, well, we'll build something right up to the edge of the spec, and then we'll make it, work. And then what basically this new regulation included was, well, we're going to just keep changing the goalpost then. You're going to build something that's right up to the edge of the goalpost. We'll move the goalposts. Because what we don't want to do is send the technology over to China that they're going to get one way or another and make it easier for them to get and make it easier for them to compete both from a national defense and from a technology leadership standpoint. And so I just think, Pat, this is going to be a merry-go-round. It's going to go round and round and round. We'll move the goalposts. They'll continue to get it through gray markets and different channels. We'll continue to try to make it harder through different import-export controls. But in the end, China is fighting to keep its market and economic leadership as well as its defense leadership. It's not leading the U.S., but it is the second biggest economy or the biggest, depending on which metrics you're using for imports and exports. And they don't want to be left behind. And the U.S. has a lot of say in how fast China can move in AI. So here we go again. It keeps rolling.
Yeah, listen, I don't want enemies of the United States or potential threats to get any technology that could harm my family. And I'm also a realist that says that you actually have to be able to stop something. I remember when I was at AMD, I was in my first year there, and we had put a blockade on Iran, and some weird picture showed up on USA Today, and in the background was a rack of AMD processors that, right, that they weren't even supposed to have, right? I got firsthand account of what you can keep from coming over the border and what you can't. So, how big is an H100, Dan? How big do you think it is? Oh, you're on mute, but that's okay. No, I'm gonna get to the punchline here. It is about the size of a carton of cigarettes. Okay, it's 11 inches long, um, and about 5 inches tall. And I mean, think about how many ways you could bring that into a country, right? You could put thousands of them on a boat and show up on the shore. You could go through airport security, and heck, you could put you could relabel it. I mean, it's kind of funny for me to think that you can stop this, and there is no phone home capability either. So you could do some sort of a lock where you had to phone home to NVIDIA to get authorization to make this thing work. All you need is drivers. They're sitting right on the NVIDIA website. And before you go the next step that says, know your customer, we've been through that. There's another article I wrote you can find on my website that talks about the insanity of know your customer type of things and how that doesn't stop anything. So the other element is that although we really don't talk about them, there are a lot of local powerhouses that are chip makers. One of them is called Biren. And no, it doesn't have the performance of an H100. It's close to an A100 though, right? And what chips do you think that all of these models like OpenAI, GPT-4 were built on? They were built on an A100, not an H100. So I think that this is a nice political gesture. I think in the end, A100s will get through, H100s will get through, border control, B. I think this is going to incent China to build its own ecosystem. And will they be as efficient or performant as an H100? No, they won't, because they can't fab them on leading edge. But I think as we saw, what they can do some miracles with lagging edge like they did with the Huawei chip. And that's it. That's all I got. The insanity. Read my two articles. Tell me.
Yeah, you hit it pretty well there, Pat. And it is insane. And it is going to continue because this isn't something they're just going to relent and be like, oh, we can't ship it. I guess we'll give up. We're out of the AI arms race. They're going to find a way. And so it's going to be a bit of a cat and mouse game that will continue. All right, Pat, we've got a little bit more time and you've got only a little bit. And you got that race pass on. Are you going to the F1 this week?
I think we talked about that, Dan. I think you said it. Are you sleeping?
Yeah, but I mean, is everybody watching the whole show? Are we that awesome? Does everybody? I just needed to bump up a reminder that Pat is anyway. All right, we're having fun.
Dude,
We're
where are you
smiling.
coming
We're
from?
laughing. I'm laughing alone today. That's fine. I'll laugh alone. Whatever. All right. We went to we got our eyes on some pretty cool AI technology yesterday. Pat, what were we doing with AWS yesterday?
Yeah, so we got the grand tour. We talked to developers, we talked to architects about the entire AWS custom silicon portfolio. Two key locations for this development work. One of them is in Austin, Texas, which we visited, and the other is in Cupertino. And I literally got every single one of my questions answered about Graviton, about Trainium, about Inferentia. So, and I got to take pictures. We got to take freaking pictures of boards, of the backs of chips that will tell you almost everything out there. Some really cool stuff that, well, first of all, the Inferentia 2 and Trainium 1 are the same chip. Now, the blocks are programmed differently for different things versus training versus inference, and it's packaged a little bit differently on the board. But it's the same chip, and I think that's really cool. Ironically, right, when it comes to generative AI, even with NVIDIA, their H100 does both inference and training. I thought that was pretty cool. And gosh, one big takeaway was they designed for 10 years, right? They designed connectors, they designed their chips to last 10 years. And I thought that was just a huge takeaway for me. They showed us racks too, which was crazy. The most impressive to me was this foundational model training beast. It's two 4U racks stacked on top of each other with a 3U that has the CPU module interconnected by copper frickin' cables over PCI Express. I would have thought for sure it would have been optical, right? That's how you connect high bandwidth stuff. But they worked the signaling to the point where they almost hit the performance of, well, not the full bandwidth of optical, but at an incredibly lower cost with the same amount of reliability and having nearly the speed of NVLink. And I just thought that was just a big thing. The other kind of fun fact here is they actually do system wafer testing. So that's taking a 12-inch wafer, putting it on a fixture at a foundry in Taiwan that you might know, and it runs neural nets on it. And I think that I've never heard of that in my life. I've heard some basic testing, right? Making sure power, making sure your pins are lighting up, but they actually do functional testing. The reason they do that is interposers and HBM and the packaging cost so much. Why test on a full processor? Now that makes sense, but the fact they do it on a complete 12-inch wafer blew my mind. And by the way, it's not punching out the chips and testing those. It's actually putting the entire wafer on a fixture and doing a functional test. Got the Inferentia 2 tray, pretty cool. It's 4U. You don't rack and stack because the CPU's on there. Boy, that looked like an AMD CPU with 12 Inferentia cards going over PCI Express. And again, I can't believe they let us take pictures of the boards themselves. We saw Lattice, some big Lattice semiconductors, probably security, potentially an FPGA for I/O. And then I saw a bunch of Marvell, which is likely networking. So again, unprecedented access. I've been covering these guys for a decade, and that's how long the company has been doing this. But big picture, I'm going to get out of my geekdom real quick, is AWS has found a way to have their cake and eat it too. They have merchant silicon. Everybody wants to work with them. NVIDIA, AMD, Intel, for CPU, for GPU, for AI, because they are the largest IaaS provider, hands down. So you want to go strong with AWS. And then they have their own custom silicon, right? CPU, inference, GPU, and kind of, where it all started, which was on the networking plane, which is ironic. So they can provide customers lowest cost. They can provide the customers highest performance. And I'm just scratching my head wondering, how do the other providers compete on this level? You can't just dive in and be world class. It took Apple 10 years and it took AWS 10 years. And the question I have is, how long will it take everybody else to get to this level, if they even want to go there? Because AWS has to be spending $1 billion a year on development. It has to be, right. There's just no, even if I go, 250 million a design per year that they have to rev, they have to be spending this. So I'm going to end it there. I'm really excited about getting this access. Never thought we would get it. Nobody lets you take pictures of boards, really, but they did. And they don't even let you take pictures of their racks, because their racks are non-standard from power and a width and a height basis. So again, okay, I'm pretty excited. I'm going to calm down. Dan, you got the ball.
Yeah, you did. You spilled my beans. You shared all my secrets. Yeah, I had a couple of people, because, when you and I asked, like, we share these? And they're like, yeah, go ahead. And I was like, sure. Like, okay. And then I tweeted, and some people were like, I actually had like 15,000 people look at that tweet. And they're like, I can't believe they let you share that. Like, people are commenting on that. And it was really cool. And it was kind of, like, I guess their point is kind of like, well, it's not like other people can't do this and take these out of a rack and take a picture of it potentially. But generally speaking, it's not a known practice to give that away. Pat, my take on it, though, is kind of like, they're like, catch us if you can, catch us if you can. There's a quote, I believe it was Herb Kelleher, the CEO of Southwest Airlines, early on. He said, I could leave my entire strategic playbook on the seat of one of my planes.
Yes.
And I'm not worried about anybody, because I don't believe anybody else can execute.
Yes.
Like we execute. And I think that was a little bit of what we were hearing, was they absolutely believe in their execution. They believe in their ability to deliver price performance. And your comment about kind of the get it all here, merchant silicon all the way to custom, homegrown silicon. They're like, we've got it all. I mean, look, this company it's not a small margin by which they're the world's largest infrastructure player. It's not small. As much as we want it to say it is, it's actually pretty substantial, especially because the way numbers are sort of represented by all the different cloud companies. When it comes to pure enterprises running their infrastructure on AWS, it's a fairly significant gulf. Having said that, of course, everybody's competing, but Pat, the theme, vertical integration, the theme, we understand that if we can be more and more vertically integrated, we can be higher growth. We can deliver better experiences across the application stack. And of course, there's a model for this. The company is called Apple. And it's a different business, but it's the same, of understanding how, as you vertically integrate, you control your destiny more. But they're approaching it in all ways, and I think they're doing a good job from a balance standpoint. You hit a lot of the geekiest stuff here, Pat, but from a story and an evolution here, Pat, they're taking things like PCIe and using it to create competitive networking to what I'm not gonna say it doesn't outperform NVLink, but the point they're kind of saying is like, yeah, but like for 1/10 the cost, we can give a whole lot of performance, and things like that are pretty impressive, as we know that the scale of AI eventually is going to need to address price markets from lower to upper. By the way, your background is so cool. I'm just telling you that. The buildings behind you,
coming up, folks.
Yeah, God, that's so cool. Anyways, all right, I'm gonna let that go there, because I know you need to get on the road, and we've still got one more topic. And gosh, we just cannot do this show in under an hour anymore. We have so much to say. Sounds like a Dave Matthews Band song. All right, let's wrap this up. We are heading into earnings season. SAP was one of the first. You had TSMC this week actually outperformed, but SAP, another company that you and I track very closely, announced its earnings, and it was a bit of a mixed bag. it didn't actually meet the street's expectation, but the company reaffirmed its longer term guidance and got a really positive bump from it.
Yeah.
This quarter, it saw its cloud business grow 16%. The street wanted 18%. It saw its backlog of cloud grow. It saw its margin grow. It saw its revenue grow. It saw its operating profits grow, and its EPS grew substantially. So, winner or loser? Well, of course, you know, what you do doesn't always matter when the street wants more. But my take is this: this is a company that's quarter after quarter doing things right. It's got a very difficult situation with lots of on-prem customers with massive custom code bases that are in a position now where they need to move from old iterations of SAP to S4 in the cloud so they can take advantage of the most advanced AI and other cloud-enabled features. It's a tightrope. If they push too hard, they're going to be the bad guy. And because of the complexities of lifting and shifting from old to new with SAP, they're going to create vulnerabilities. At the same time, the company saw some massive customers this quarter make commitments and move over to SAP, which it's always fun to watch the tit for tat that goes on between Oracle and SAP every quarter when they each announce the wins that they took from each other's companies. But I think SAP is taking a very balanced customer-led approach. They're basically trying to listen to the customer base and make transition with the customer, but at the same time, with things like Joule and what they're doing with advanced AI features being in the cloud, they're subtly pushing the envelope of saying, if you want to get the best of SAP, you're going to have to be thinking about migration to the newest technology. It's a solid quarter. I mean, this is the playbook that Christian Klein, CEO, is trying to execute. I had some time this quarter to speak with him about it, and what I'm seeing in the numbers tends to match with what he indicated in the interactions that we've been having. Strategically speaking, I think it's a tough but achievable road ahead for the company. The company needs to be executing, needs to be making its customers feel that there's enough value in the migration and in the up leveling of their SAP stack. At the same time, they don't want to give customers reason to feel they're being bullied or pushed after making massive investments for multiple decades to build SAP instances that run their businesses. And by the way, taking down your ERP system or changing your ERP system is a massive commitment. Anyone that's ever done one knows SAP, has to really walk this tightrope. But I think according to the numbers, according to the reaffirmed guidance, it looks like that's the direction it's heading.
Yeah, SAP is a company that you run your business off of, right? I mean, you're building things. You have a transportation company, you have an airline, you have a power company. I mean, this is technology that you don't want to mess with. And it's a double-edged sword, right? It's strategic and it's sticky, but you don't want to touch it, okay? I believe that SAP has been too gracious with some of its customers, and quite frankly, it's holding them back. I think what we learned in areas like Windows and what we learned with Oracle Fusion was that at some point you have to cut and run, right? And you have to move, even though the register might write nasty articles about you. Because what happens is you end up splitting your R&D. Okay. And I urge any SAP customers out here to at a minimum get on the Common Core. Okay. You can get on the Common Core 3 different ways. It's not like SAP is saying there's only one way to get there, right? There's 3 ways to get there. But if you're rolling and running on something that you were using in 1996, I can't even remember the name, you need to move, or you need to get onto something else, or you need to write it yourself. Because it's holding back SAP. And I think this, momentary thing with the quarter for a company like SAP, to me, is meaningless. I mean, I'm not an equities analyst, and quite frankly, I don't even care what the stock does. But what I do care about is that it is investing R&D, and it is taking care of its future forward customers that aren't holding it back. So I'd like to see a little bit more push. The company even has, programs like Rise and Grow, right, to get to help customers get there. So I think we're, I don't know, a couple of years away from a cut and run. By the way, and there's no other vendor who will just let you sit and squat on-prem who is worth their salt because there's no money in it. So all in all, I'm really happy with what the company has done with the cloud. And to get all the good AI goodies, you have to get on the Common Core and get in the cloud. And we've got multiple ways of getting there.
Yeah, you hit it, buddy. I even a little bit more assertive than I am. It's a really tough balance. You don't want to incent anyone to leave, but you need to
Where are they going to
incent
go?
them.
Where are they going to go? Like, who squats? I mean, what, like an IFS?
What I mean is, it's pretty
something
well
like that?
understood that if you R3 instance to S4, that lift is the same as moving to Oracle.
Yeah.
So what I'm saying is, when they have to lift off the prem and their custom code, they're going to have to basically start from scratch, which opens the door. And that's all I'm saying, is that there's that threat can hold us back. You know how many times we think we don't want to lose that customer, and you make a decision based on that, even though you're holding back from saying or doing the right thing. We always are balancing that. It's a tough one, but I think the company's handling it well. Pat, you have to go. So I'm going to end this podcast right now. But we covered a lot of ground this week. It was a great show. We talked some RISC-V, Qualcomm, Google, Lenovo, Analyst event, Oracle's NetSuite event, NVIDIA. Are their chips going to make their way to China? We think so. AWS and the Annapurna Lab Tour, and SAP's quarterly results. Pat, great show, bright and early, but I'm pumped now. I will see you at the track. It's qualifying day. And by the way, it's a freaking sprint race this week. So we have three awesome days.
So exciting. Hey, a very important question before we close, Dan.
Yeah.
Are you doing Schumacher or Barrichello?
Don't make me talk about that. I don't think I'm going to talk about that. But what I'm going to do,
it's freaking race day. Are you kidding me?
I'm gonna represent from head to toe, and I'm who are you cheering for, Pat? Who are you cheering for?
Listen, I'm a Red Bull fan before they started winning.
You're front runner.
I'm a Red
That's
Bull
a front
dude.
runner. Just want everyone to know that, because he is number one. But I am number two, apparently, and I'm voting for Lando, who has been number two. It's just in my veins. Call me number two. Call me the 5. You're the 6, but whatever. All right, everybody. Hit that subscribe button. We appreciate you all being part of our community. Root for Lando, not for Max.